Simon Machell, thank you very much for joining us today.
Thank you.
Let's talk a little bit about a recent survey that Aviva has done, some of the attitudes toward purchasing, toward insurance, various different things. What were the big surprise findings that you came away with?
Okay, well, this was a big survey we did really over 5 years, just to look at sort of consumer trends in terms of insurance. I guess the three big takeaways for me are, the first thing is that actually people generally have a pretty short-term time horizon to their savings, and actually that's similar across the whole world. It's more acute in Asia in terms of what people are looking at. Second thing is people are pretty anxious about buying financial products. The understanding of what they're buying is actually quite limited, and again that applies across most of the markets in which we operate. And the third thing is people are pretty risk averse, so generally people don't want to take a lot of potential downside risk in terms of their savings. So I guess not things that are particularly surprising, but what we found is it was reasonably consistent across most of the markets in the world through which we operate.
One point that surprises me from that is the short time horizon, because many Westerners anyway perceive a lot of Asian companies as being savers, maybe having a long-term perspective. You think of the Japanese having a long-term perspective on business, that sort of thing. But you're not finding that with their investing.
So no, generally people are looking short-term. The challenge we have as an insurance industry is how can we get people to think longer term? So if you're in your 20s and you're thinking about what you might buy for retirement, thinking over 5 years actually is not going to do you a lot of good. You need to think over 20, 25, 30 years in a way. So I think the challenge that we as an insurance industry have is how can we educate people to some extent to understand the different horizons they need to look at for different types of products.
So what do you, in light of the last few months of the economic meltdown, what is the strategy to get people to think longer term when we've seen one of your biggest competitor probably literally going down the drain for perhaps no apparent reason other than market sentiment or investor sentiment? How do you change perceptions?
Well, it's really interesting because actually, if you look, the average man in the street has some difficulty understanding what are sometimes complex insurance products. So the AIG example was a good one in a way, that what you saw here in Singapore was people queuing outside AIG's offices to effectively cash in their policies on the day the news was announced. Now, the reality was that actually AIG policies of people in Singapore were pretty secure because of the way the regulation works. AIG's problem was a slightly different one, which was a much higher level up within the company. But it's all back, I think, to this education challenge, that in terms of people understanding what they've bought, understanding also how secure the company that they've bought things in actually are. And there's often a difference between the local company that they're investing in and maybe a holding company that is sitting in a different place. But if you're someone who doesn't have a huge knowledge of financial institutions, you won't understand the difference between a local version of the company and a holding company. So it's just about how to try to explain to people how all the different bits of the jigsaw fit together, really.
Moving forward the next, let's say, year in the time horizon of Aviva, what are the big challenges for you today, tomorrow, next month, 6 months from now?
Okay, I think if I looked at the sort of Aviva in Asia Pacific, the challenge that we've got is continuing the sort of the growth momentum that we've had over the last few years. Really, we've set ourselves a 20% year-on-year growth target. We did very well in 2007. We achieved about 72% growth, I think it was. If you look in the first 9 months of this year, we still grew by 13% despite the sort of difficult market conditions. So actually my 20% on average looks quite sustainable. But what I'm seeing within that is very different situations in different markets. So in some of the more mature markets, it's clearly much harder to get growth levels to come through. In some of the markets they're developing, so India, China, we're still getting pretty spectacular growth rates based off the back of just the demographics and the increasing wealth within that country. So I think the challenge that I've got is how can I make sure the balance across the piece is right in terms of where the growth comes from, but also how can I respond to customer demands in terms of the sort of products that they want. So last year people were very happy to buy equity related products where they were able to take the upside but maybe also take a little bit of downside risk. What we've seen more latterly is people are far more concerned about equity risk and actually they're looking for more guarantee type products. So the challenge that I have and my team has is how can I offer a balance of products across the portfolio that means that people can choose what they want to suit their own circumstances.
I'd like to change tack just slightly and talk about this whole notion of growth and the question of ethics within companies. How can a high growth industry, obviously financial services more recently has faced this challenge, live with high ethical standards?
Yeah.
How do you see that from your company's perspective, where, obviously you've got agents out there trying to sell, that's your business. How do you mix those two?
I think it's all about looking after your customer fundamentally, because at the end of the day, you've got the customer who buys your products has to understand what they've bought from you. So I don't think you are behaving properly as an organisation if you effectively sell somebody something they don't understand. So a lot of products people buy, and if you go into a supermarket and you buy an apple or an orange, you know exactly what you bought. You know you bought a piece of fruit, you can take it home, you can eat it. You know what the purpose of it is. People who buy insurance products often are buying a reasonably complex set of future promises for something to happen. So trying to explain at the point of sale what that is, for me, is the fundamental key to, if you like, ethical business. So for me, ethics in insurance equals how you sell the product properly to the customer and how you let the customer know, the upsides of the product, but also the downsides of the product. So when they go into it, they know that if this happens, that's what they'll get. If something else happens, then they'll get something else.
So in recent months, have you taken away any lessons as to how you should perhaps retrain your troops or talk to them in a different way to make sure they understand that, based on what's happened in some other industries?
I think it's absolute focus on explaining to people what they've bought. So in a rising market, actually people don't really care, because they bought something and the next day it's worth more than it was the day before. So the fact that whether they understand it or not actually becomes less important. But I think the whole way you sell things is ingrained within the business. You can't change it and say, well, actually in a good market it's okay not to explain things. You only need to start explaining things in a more difficult market. So the whole way you conduct your business, for me, is fundamentally important. So it absolutely is at the core of what we do. At the end of the day, the customer is the person who has to be at the centre of what we offer, and therefore they have to understand what they've bought from us.
Many of your products are financially linked. Is it a good time for people to buy these products now?
I think you're asking me to give you financial advice here, which is
well, it's a bear market, right? Yeah. And perceptions are it will be that way for quite some time.
Yes, I think the challenge is, have we reached the bottom in terms of the market? So is now a good time to buy or not? I think to some extent you have to look at your personal needs and your time horizon. So if you're saying, should I buy now for something which is a 30-year time horizon for my pension? Well, probably buying now is better than buying this time last year, because you're buying it at a lower level. If you're saying, should I buy now because I've got something I need to pay off in 2 years' time, that's a much harder question to answer. But I guess if you've looked over long periods, investments in sort of equities, investments in properties have been good investments. And the long period has been 10 plus years in lots of cases.
Simon Machell, thank you for your time.
Thank you.